Welcome to this week's Nebraska Soybean Board Weekly Market Roundup, brought to you by Nebraska soybean farmers and their checkoff. I'm your host, Steve White. We're trying to cut through the noise to find out what's really happening in those markets that affect us. A lot of things to talk about. China, a lot of observations, a lot of people watching. What's going to happen there? And will they get into the market? And will they buy some soybeans? And we'll be taking a look at the livestock markets today as well. Joining us on the program, we've got Mike Zuzolo from Global Commodity Analytics. Kyle Bumstead, he certainly keeps his eye on all the livestock happenings. And we've got a cattle on feed report today. So we've got a lot to get to. Let's just take a quick headline from each of you. Mike, let's start with you. We had this phone call between the White House and Beijing. What are you watching in terms of what's going to happen next with China?
You know, I think the net, Steve, is that between the crop harvest weather getting wetter and the aftermath of the Federal Reserve and the commodity markets getting shaky with the strengthening dollar, it was really up to the U.S.-China trade call between President Trump and President Xi to kind of decide and weigh in on which side this market was going to go. And the trade clearly after midday decided that the beans needed to not only take out their WASDE report low, but also fill the weekly chart gap to the downside left over from the September futures. And I think what that spells at this stage is the trade saying it was a good call, but we have no details. And no details means that you're not going to talk till October 31st at the APEC summit. That means another 9 million tons of beans won't be bought by China out of the United States. And I really think that's what, at the end of Friday, how I felt.
Yeah. And Kyle, I'm guessing the thing you're probably watching today is cattle on feeds, and what are those placements going to be looking like? Is that what you're paying attention to as the week closes here?
Yeah, I am watching that. You know, we got this cattle and feed report coming up here at 2:00. We're looking at that placement number. The guesses were right around that 91.3% of last year, but you know, we're still got the Mexican border closed. I mean, there's been quite a few feeders moving. The fall run's just getting ready to get started here, but there was quite a few yearlings come off grass here in the last month. So we've got quite a bit of that to deal with here and a lot to digest here in this report coming up. The marketing number, obviously everybody's going to be watching that because we had slaughter pace cut. A lot of that was cut last month as well. But then we've only got 21 marketing days here this year versus 22 last year. So we're already automatically behind the 8 ball when it comes to that number as well.
As you said, a lot to digest, and digest is what we will do after this message from the Nebraska Soybean Board.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines, and it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Welcome back to the weekly market roundup. Our guests this week, Kyle Bumstead and Mike Zuzolo. Mike, let's go to you. You talked about soybeans. Was there kind of a premium in the market? Are we seeing things pull back? Is that just seasonal as harvest approaches, or what are we watching for there?
Yeah, it's a great question. I would say it this way and frame it this way, Steve. At the beginning of this week, looking at last year in lead month futures with corn, beans, and soft red wheat, corn and wheat were both about 20 to 30 cents still below last year at the end of the 2024 calendar year levels, while beans were up about 50%, or 50 cents, I should say, from the December 31st, 2024 close. I do think there's some premium in this market. It may be justified because the yields here in the United States are going down with the August and the September weather. It feels a lot like September and August of last year in terms of the price action. Chart-wise, in terms of the gaps left over after the September contracts went off the board, in terms of the USDA report being essentially negated by the price action and went up higher in the price action for corn, beans, and wheat after the August report. September report, same thing. We're trying to dial in a lower yield, but by the same token, try and balance this bean market out. I think when this week ended, the trade really wanted to say to itself, look, we need Chinese beans at this point because we are seeing a basis level slide in the Western Corn Belt that even the Asian press is picking up on. I saw a big article about North Dakota farmers in the soybean areas being under tremendous financial stress right now, because in North Dakota we're $1.50 under because the Pacific Northwest has dried up, and in Nebraska and Kansas that has just filtered down, 90 under in Nebraska, 80 under for us here in Northeast Kansas. And I think that's the cash and the futures are coming together because it is harvest after all. So that no news is not good news. The trade is always one of details when it comes to these tariffs.
Mike, it's interesting you're mentioning the Eastern Asian press has picked up on what's happening around here. I actually ran into a reporter from Hong Kong a couple of weeks ago, was visiting central Nebraska, and he was talking to a couple of farmers. I bumped into them and I go, what's this guy doing? He says he wants to get the read on what Nebraskans are feeling about things that are going on that way. Kyle, we talk a lot about soybeans, certainly when it comes to China. Where are things standing on the protein side in terms of China? Is there anything we should be watching that way?
That's a good question here. We can always watch the hog complex, but hogs in the U.S., that's kind of a market that's, pretty tough here. It's manipulated. There's it's very thin, but, protein side, as far as the beef goes, they don't directly buy beef from us, but it comes through other sources to get there. So, I mean, with the price the way it is, it's not surprising that we're not seeing the export demand that we would normally be seeing here if we were a lot cheaper as far as the box goes. So, looking forward here, just watching the forward spreads here, and that's going to be kind of mostly your supply and demand, as Mike alluded to here. We've got those basis issues with the grain, and I think there's some issues here with the livestock as well too when it comes to the export markets.
Mike, we touched on it earlier, but this has been an eventful week. We saw the Fed cut interest rates. It's like, we've almost forgotten about that by this point. We've seen the dollar, some movement on the value of the dollar. If the dollar does rebound here, is that going to make some buyers a little reluctant to pull the trigger on some sales right now? Or is the dollar going to come into play in terms of some export movement here?
I think one thing we can say with certainty, and that's about only one thing I can say right now, Steve, is that dollar being at a 43-month low this week before the Federal Reserve came out with their update and then made another new low after their update has been a terrific tailwind in this market for beans included. I mean, we have seen a really strong pace of exports even without China, and Brazilian prices have gone up to over $12.25 a bushel, in part because we've made a 15-month high in the Brazilian currency. So many of our currency partners, Brazil, China, Mexico, seeing very high currencies as we've seen very low currency market here in the dollar. And so that's what we don't want to lose. We can get a policy adjustment by USDA, get maybe $10 an acre, $20 an acre in emergency payments. But what we really want is that dollar to stay weak, because then we have a fighting chance to export our way out of this market. If we would have yield reductions here in this country, and then with South America, they're getting close to having their weather market because they're starting to plant right now.
Mike, I want to keep it with you for just a moment. You mentioned weather. We're getting some wet weather coming across the plains right now as we're recording. I talked to an agronomist the other day. He says tar spots, southern rust, all the problems he's seeing are just seeming to add up. If we see some crop that's under pressure and we get some wet weather and then some wind, do you have any concerns about standability? Are we going to be able to get this crop in the bin? Do we start to have some of those conversations? Is that something you've thought about at all?
Yes, absolutely. East of the Mississippi River, I think it gets worse and worse. And because not only do they have disease pressure, they also have drought, a flash drought pressure too, Steve. And it's interesting because where we are, you and I and Kyle, on the western side of the Corn Belt, everybody's been running for the most part corn. I've got clients near Atchison here that are a third done with corn at this point. It's been so dry and going so fast. You go over into Illinois and Indiana, they're about a third done with beans as of the end of this week. So here again, I think east of the Mississippi River, where I think USDA has the highest corn yields that need to come down, Illinois, Indiana, and Ohio, those are the areas that are most concerning to me. And that's where I'll stress it again. The basis versus the futures this year is going to have to be two different marketing plans, I'm afraid. And we really want to split out the corn versus the beans because of the crop production situation.
Kyle, I want to talk to you more about the international situation. I had talked to you a moment ago about China, but really the big thing on the beef markets continues to be Mexico and that border being closed. And is that going to be playing into the cattle and feed numbers, I'm guessing?
Possibly. No, I think this is one Friday here. I think the last 2-3 weeks we've had someone, or there's been a headline about Secretary Rollins talking about the Mexican border and things like that. And when they've had their press conferences, they've done absolutely nothing, or they've talked about nothing. So we've had big swings in this market. It's nothing for feeder cattle to see a $6-7 range in a day's time. So I think moving forward here, you really need to keep your eyes on the cash market. Now, I do know that the Texas Direct and the Oklahoma Direct here today on Friday were a little weaker. So I am looking for that index to potentially be weaker as we start off the week here next week. Now, something else that we need to keep in mind too, September feeder cattle go off the board here on Thursday. So whatever happens that day is going to affect the September contract. And for the October contract, you could keep this basis the way it is. You've got an $8 basis cash over the futures right now. Those futures contracts can do whatever they want for the next 30 days or whatever until that October contract gets ready to expire. Like we've seen here when August went off the board, we saw a pretty good size sell-off here, and September is still trading discount to the cash market here as far as the index and the index print. So those futures contracts can do whatever they want to do for like 2, 3, 4 weeks until they have to get really zoned into that index. So folks really need to be watching this thing. It's been a very fast market as far as these cattle are concerned, both live and feeder cattle.
Very interesting. Mike, I want to circle back to where we started. We talked about China as we got things going today. While we're all selfishly thinking, gosh, it should be nice to see some movement on beans and all that, we have to remember it's probably rare earth metals. It's probably TikTok. It's probably things that are kind of outside of the realm of the things a lot of us in the Western Corn Belt are talking about. Those are really going to be the things that are going to be driving discussions, aren't they?
I think you hit one of the most important pieces of the puzzle, Steve, when it comes to both the currencies and the grains, and that is China is essentially backstopping Russia and their war against Ukraine. And that's come out over the last couple of weeks, both by President Trump going ahead and sanctioning India, but not China, and then turning and saying to Europe, look, if you want me to sanction China, you sanction Russia first and stop buying their natural gas and their crude oil. And I think this is where the biggest problem is for us to get a trade deal very quickly. It seems to me that this time around, China and Russia are in it together to win it together, and we're not going to be able to break that apart. And so I think they feel like they're coming from a very strong place. And here again, this boils back down to the currency markets, the trade weakness, the de-dollarization, the feeling that China is getting on top. That's been part of the reason why traders have hedged the dollar, and that has helped us in the ag sector. I just don't want that dollar to bounce and go up and change trends and appreciate at this point because something militarily happens and it comes back as the traditional safe haven. If it does that, I'm going to have to make fresh plans to get new hedges in place, I think.
It's always something, isn't it, Kyle, as we start to wrap things up? But, certainly the story of the year has just been the strength in the cattle markets. And as we look a big picture, what's kind of your assessment of where we stand right now?
You bring up a very valid point here with the strength in this cattle complex. Now, while we were at break here, I did some calculations here. A year ago this week on the October contract, we were sitting here. Now, this is October 25. That's our lead contract. This is the October 25 contract. We've had a $66 rally from the 176 lows to the 242 highs. And we're about, $7 off that high right now. We're still $59 this week. This week, we're still $59 above where we were a year ago on that October 2025 contract. So that's been the rally. Now we need to keep our eyes on the slaughter pace moving forward. We also need to keep that's going to probably likely dictate the amount of slide we're still going to continue to see here in this box beef market. We also need to watch the movement as far as the box beef goes as well too. Folks, if they can't afford it, and I'm just banging the drum again, if people can't afford it, they won't buy it. And I think some people are starting to really wake up and see that maybe we can't afford to eat this high-priced beef, and we are switching to other alternative proteins. And I think that that's something we need to watch moving forward here, both short-term and long-term.
Well, one thing is clear here in the White's house, we're still eating beef. That reminds me, I've got some leftover meatloaf I need to consume. I haven't had my lunch yet. Thank both of you for being with us today. Mike Zuzolo from Global Commodity Analytics, Kyle Bumstead joining us as well. As a reminder, certainly trading does involve risk of loss, not suitable for all investors. That is this week's weekly market roundup brought to you by Nebraska soybean farmers and their checkoff.